Alternative investments are back in the spotlight because in overnight trading, we saw an all-time high for Bitcoin. Bitcoin traded above 123,000 US dollars for the first time ever, and that exuberance in Bitcoin trading lifted the whole cryptocurrency complex. And you can see from this chart just how important the move is, because not only did it hit an all-time high, but it confirms that in the big picture, on the overall view of Bitcoin, we've confirmed the uptrend. And although there's a lot of movement and a lot of volatility in the Bitcoin chart, as you can see here, this longer term picture shows just how much Bitcoin can increase and decrease in price in a very short period of time. But overall, on the right-hand side of the chart, we can see that that uptrend has been confirmed by the more recent moves, and plenty of interest in Bitcoin in trading today via those traditional instruments such as the ETFs that give exposures to cryptocurrency, and also to some of those particularly US companies that give direct exposure to Bitcoin because of their substantial holdings. And we're talking about companies like Coinbase and Strategy. Now, interestingly enough, Coinbase and Strategy didn't rise as much as the cryptocurrency itself. And that's an unusual position given their leveraged exposures to Bitcoins. But one of the reasons for that were the other currents in markets in overnight trading. And in particular, the announcement by the US of further tariffs against trading partners. Now, we'll all remember, I'm sure, the way markets reacted in April when tariffs were first imposed, and that huge sell-off that we saw in share markets in particular in response to the threats to global trade that perceived around those tariffs. But if we turn to the chart of the volatility index, also known as the fear and greed index, you can see just how differently markets are now thinking about tariffs. On the left-hand side of the chart, those big spikes in volatility in the fear and greed index show just how concerned investors were when tariffs were first introduced by the US in April. But you can see the decline in the fear and greed index over the period, and here we are on the right-hand side of the chart at significantly lower levels, and we're showing no reaction to the overnight announcement of tariffs. And that seems to be largely due to the impact that investor thinking about tariffs has changed. It's changed from concerns about the threats to the global trading system and potentially a decoupling between the world's two largest economies in the US and China. And instead, it's now just seen as another negotiating tactic as the US looks to rebase its trade relationships with the world. And so markets largely shrugged off the impact of the tariffs that were announced last night, and we saw gains for US indices across the board. And it was very broad-based. In contrast to most of the gains we've seen over the last 2.5 years in the US, last night's gains were across sectors, most sectors gains. And in fact, in a piece of irony, the only sectors that didn't perform were the previous market darlings. That big drop in oil prices saw the pressure hit oil and energy stocks generally. Gas stocks also fell. And we also saw pressure on semiconductors as a group. They also fell. So some of the more glamorous stocks didn't perform in overnight trading. Instead, it was the broader, more defensive stocks. And that defensiveness was reflected in other markets, and in particular, Treasury markets selling off ahead of tonight's read on inflation. Now, we've got a big data day coming up. In the middle of the session here in the Asia Pacific region, we'll be hearing from China on retail sales, on GDP components, and on employment data. We'll also see industrial production numbers. And given the upswing that we saw in the trade data yesterday from China, there's potential for some good news on the industrial outlook from China mid-session today. Then tonight, we turn to the US, where we were looking at inflation data. Now, it's widely expected that the impact of tariffs and higher energy prices will see inflation start to lift again in the US, and that's a concern. Even though the estimate is that the headline will lift to about 2.6%, not too far from the Fed's 2% target, the fact that it has stopped declining and has turned upward might give some analysts pause for thought. Something to watch out for. Turning to the local markets, one of the stars of trading yesterday was DroneShield. Now, DroneShield has been a very popular trading stock. It regularly ranks in the top 10 most traded stocks on the Moo Australia platform, and here's one of the reasons why. Now, once again, we've gone to the big picture chart, and you can see towards the left-hand side of that chart the previous all-time high for DroneShield. However, in the last few months, since February this year, DroneShield has quintupled in price. It's gone from 60 cents to touch a new all-time high in trading yesterday at $3.24. And there's been some good news flow to support those big moves. 2 weeks ago, we heard about a new $63 million contract for DroneShield with a European manufacturer and procurer of defence goods. And just this week, we heard that DroneShield had invested $13 million in its production facilities to help meet that order and future orders. And with the US urging NATO partners and other allies to lift defence spending, we've got a number of key reasons why investors are so keen on the DroneShield price. And that spectacular rise put it as the top performer in the Australian share market yesterday.